Welcome to this edition of Ethical Sustainable Investment News and Analysis to Profit By. I'm Ron Robbins, an ethical investing pioneer for over 40 years, quoted in the Wall Street Journal, Market Watch, the Globe and Mail, and numerous other media, and founder of the highly respected global ethical sustainable investing information website, Investing for the Soul. And please listen to my disclaimer statement at the end of this podcast. Now enjoy this podcast. Hello, Ron Robbins here. So welcome to my podcast, episode 106, titled Socially Responsible Stocks to Buy. It's presented by Investing for the Soul. Investingforthesoul.com is your site for vital global ethical and sustainable investing mentoring, news, commentary, information, and resources. And look at my newly totally revised website at investingforthesoul.com. So remember that you can find a full transcript and links to content including stock symbols and bonus material on this episode's podcast page located at investingforthesoul.com/podcasts. Now, if any terms are unfamiliar to you, simply Google them. Also, a reminder, I do not evaluate any of the stocks or funds mentioned in these podcasts, nor do I receive any compensation from anyone covered in these podcasts. Furthermore, I will reveal to you any personal investments I have in the investments mentioned herein. Additionally, quotes about individual companies are brief so that I can get as many companies covered as possible in the time allowed. Please go to this podcast's web page for links to the actual articles for more company and stock information. Also, some companies might be covered more than once, and there are also 7 article links below that time didn't allow me to review them here. I'm starting with this article titled 10 Best Socially Responsible Stocks to Buy According to Analysts by Fahad Saleem. Article found on InsiderMonkey.com. Here are a few of Mr. Saleem's quotes on each of his picks. For this article, we first scanned the Vanguard FTSE, that's FTSE, Social Index Fund Investor Shares, which seeks to track the performance of the FTSE for Good US Select Index. The fund uses ESG criteria to screen stocks. We picked 10 stocks which have strong upside potential based on their average analyst price targets. Starting number 10, the Home Depot Inc. Number of hedge fund holders, 62. Analyst price target, $340. The Home Depot also mentions its ESG goals and ESG-related plans on its website. 9. Costco Wholesale Corporation. Hedge fund holders, 66. Analyst price target, $545. Last year, Costco voted in favor of a proposal put forward by Green Century Capital Management, which suggested that the company should set targets for reaching net zero greenhouse gas emissions. 8. Nike Inc. Hedge fund holders, 71. Analyst price target, $138. Nike's slogan in the ESG space is Move to Zero, which shows its commitment to becoming carbon neutral. 7. Pfizer Inc. Hedge fund holders, 75. Analyst price target, $46.50. Pfizer plans to achieve the net zero standard by 2040. 6. Tesla Inc. Hedge fund holders 91. Analyst price target $186.20. Despite short-term headwinds, analysts believe Tesla has a lot of room to run. 5. Nvidia Corporation. Hedge fund holders 106. Analyst price target $355. Nvidia Corporation has pledged to use advanced technologies to fight the climate change problem. Nvidia plans to source 65% of its global electricity from renewable sources by 2025. 4. United Health Group Inc. Hedge fund holders 110. Analyst price target $600. United Health Group Inc.'s ESG risk score is 15.3, according to Sustainalytics, which comes under the low-risk category. 3. Visa Inc. Hedge fund holders 177. Analyst price target $300. A strong ESG score and investments in the ESG space makes Visa Inc. a key part of the Vanguard FTSE Social Index Fund. 2. Alphabet Inc. Hedge fund holders 209. Analyst price target $130. Alphabet Inc. is famous for investing heavily into the ESG space and environment-related projects. And number 1, Microsoft Corporation. Hedge fund holders 259. Analyst price target $304. Microsoft Corporation has secured solid ESG ratings from several independent agencies because of its investments in the ESG space and sustainable business practices." End quotes. Now an article that might interest many of you. It's titled "Top Infrastructure Stocks from an Engineer's Perspective" by Financial Engineering, seen on seekingalpha.com. Here's some comments from the article. 1. American Tower Corporation is one of the largest global players in physical communications assets, most notably in macro cell towers and now data centers. The critical necessity for American Tower Corporation's assets will be at the heart of what is being dubbed as Industrial Revolution 4.0, which is being discussed in regards to 5G and the Internet of Things. With the implementation of 5G and the Internet of Things, we have the capability to significantly reduce traffic accidents, drastically improve manufacturing operations for greater flexibility in meeting global demands, and greatly improve our efficient use of resources with improved distribution networks of energy sources. 2. Union Pacific Corporation. Train operations have greatly improved in recent years through a revolutionary change in the approach to rail operations known as Precision Scheduled Railroading, or PSR. The benefits of PSR are significant to rail operations. PSR changed the focus of traditional rail operations from full train operations to individual train car operations. In a recent government report, it is evidenced that PSR has led to a drastic decrease in operating ratios, operating expenses as a proportion of revenues, from 2011 to 2021. 3. DTE Energy. The main reason for including this company among the most important is due to the increasing electrification of our world. The vast majority of DTE's revenues are derived from its 2.2 million electric customer connections, the undisputed leader in the state of Michigan. Detroit, Michigan automakers own roughly 10 to 15% of global market share for vehicle sales and closer to 40% of the United States market share. If DTE is successfully able to expand and sufficiently meet the energy demands of the EV ramp-up in Detroit, it will be pivotal in proving the viability of EV adoption, not just in the United States, but for the rest of the world as well. While each of these companies may not provide home-run returns witnessed by tech in the past several decades, I'd be surprised if they do not provide solid, healthy returns and stability to a portfolio. If these corporations and their peers suffer substantial losses or fail in the near future, we most likely will have bigger concerns as a society than the performance of these stocks." End quotes. A favorite of older ethical investors is utility stocks for their stability of returns. This is a good piece about them. It's titled Top Utility Stocks for May 2023 by Noah Bolton. Article on Investopedia.com. Here's some of what Mr. Bolton says about his picks. These are the utility stocks with the lowest 12-month trailing price-to-earnings ratio. Because profits can be returned to shareholders in the form of dividends and buybacks, a low price-to-earnings ratio shows that you're paying less for each dollar of profit generated. One is Enel Chile SA. Enel is a Chilean-based electricity provider. The company creates electricity from solar, wind, and geothermal power plants. 12-month trailing PE, that's price-earnings ratio, 2.8. Brookfield Renewable Corp. Brookfield Renewable owns and operates pure-play renewable energy facilities focusing on wind, solar, and hydroelectric power. Brookfield Renewable, an EIG consortium, entered a binding agreement in March to acquire 100% of Origin Energy Limited's energy markets business, Australia's largest integrated power generator and energy retailer. 12-month trading PE ratio 4.2. 3. Pampa Energia SA. Pampa Energia is an integrated energy company based in Argentina, operating hydroelectric plants, thermal plants, and wind farms. The company also explores and produces natural gas, oil, and various petrochemicals. 12-month trailing PE ratio 4.3. These are the top utility stocks as ranked by a growth model that scores companies based on a 50-50 weighting of their most recent quarterly year-over-year percentage revenue growth and most recent quarterly year-over-year earnings per share growth. So in this category, one is Autos Power Inc. Autos Power is a clean electrification company that services commercial, industrial, and public industries. At the end of 2022, Autos Power reached an agreement with True Green Capital Management, LLC, to acquire 220 megawatts of solar assets for $293 million. Earnings per share growth, 600%. Revenue growth, 24%. Second in this category, Cadiz Inc. Cadiz is a water treatment company that offers clean water resources for agricultural development. Note Cadiz doesn't have an earnings per share growth figure because the company reported negative earnings per share in the most recent quarter. Revenue growth 304%. And number 3 in this category, Capital Power Corp. Capital Power owns and operates 29 renewable energy facilities located throughout North America. Net income in the first quarter more than doubled from the year before. Earnings per share growth 148%. Revenue growth 153%. Now utility stocks with the most momentum. One is Genie Energy Limited. Genie is an energy provider that supplies electricity and natural gas for residential and business customers. The company also operates a solar energy business segment. In late March, Genie Renewables acquired the rights to a 6.25 megawatt solar generation site in upstate New York. Genie's revenue increased 23% year over year in the first quarter of 2023. 12-month trailing total return 129%. Cadiz, see company description previously, 12-month trailing total return 129%. And now Chile SA, see company description previously, 12-month trailing total return 118%. End quotes. Lastly, we have this recommendation titled 3 Sustainable Investing Stocks to Buy for Socially Responsible Gains by Joel Baglole. Found it on investorplace.com. Now a few comments by him. 1. General Electric. The company is pushing further into renewable energy, namely with GE Vernova. GE Vernova develops wind turbines, hydropower generation, and energy storage solutions. GE stock has gained 73% in the past 12 months, including a 56% increase this year. 2. Ford Motor, which is spending more than $50 billion in an effort to produce 2 million electric vehicles a year by the end of 2026, and the company pays a quarterly dividend of 15 cents a share for a yield above 5%. 3. Albemarle is the largest producer of lithium for EV batteries in the world. Over the past 5 years, Albemarle stock has gained 78%. In the past 12 months, however, the company's share price has come down 10%. This is mainly due to shifting demand in China, where the country's electric vehicle production has been repeatedly interrupted due to COVID-19 lockdowns. End quotes. Now some other honorable mentions, not in any order. 1. Title: Atlantica Sustainable Infrastructure, Revolutionizing the Energy Industry with Sustainable Investments on beststocks.com by Roberto Liccardo. 2. Title: This solar energy tech stock could surge 50%. Guggenheim says on CNBC.com by Hak-Young Kim. 3. Title: 3 Sustainable Investing Stocks to Buy on investorplace.com by Joel Baglole. 4. Title: Top Alternative Energy Stocks for Q2 2023 on investopedia.com by Zor Thihartun. 5. Title: 3 Alternative Energy Stocks to Watch amid insufficient hydrogen funding on Zacks.com by Aparajita Dutta. 6. Title: Water and Investing, the Risks, Opportunities and Why It Matters on hl.co.uk by Laura Hoy. And number 7, title: 7 Alternative Energy Stocks to Watch in 2023 on investorplace.com by Muslim Farouk. Well, these are my top news stories with their stock and fund tips for this podcast titled Socially Responsible Stocks to Buy. Now, please be sure to click the like and subscribe buttons on Apple Podcasts, Google Podcasts, or wherever you download or listen to this podcast. That helps bring these podcasts to others like you. And please click the share buttons to share this podcast with your friends and family. Let's promote ethical and sustainable investing as a force for hope and prosperity in these terribly troubled times. Contact me if you have any questions. Thank you for listening. Talk to you next on June 2nd. And again, look at my newly, totally revised website at investingforthesoul.com. So anyway, bye for now, and wishing you well. Bye. Learn how to create a simple portfolio reflecting your personal values by taking my 1-hour tutorial. Go to investingforthesoul.com/podcasts and click the link in the right-hand column for my DIY Ethical Sustainable Investing Pays tutorial. Now, I'll mention in the podcast if I have any direct interest or holdings in companies or securities I'm talking about. Furthermore, any news, opinions, analysis, or other information offered by myself, as well as references and information to or from other external sources in this podcast, is provided as general market information and should not be relied upon and thus does not constitute investment advice. Investors should consult their own licensed investment professional before making investments. Also, I will not accept liability for any loss or damage, including without limitation any loss of profit, which may arise directly or indirectly from use of or reliance on information in this podcast. Do contact me at ronr@investingforthesoul.com. Signing off, this is Ron Robbins.